Hi, my name is Susan Abraha. I am an enrolled agent and tax resolution specialist. Today I wanted to make a video just to really break down the IRS Fresh Start programs for you so that you can be more of an informed taxpayer, okay? And we do hear the word IRS Fresh Start programs a lot, right? It's in ads, it's in radio, we see it everywhere, right? Online. IRS came out with the Fresh Start program back in like 2011, okay? They wanted to get initiatives to help taxpayers reduce their tax liability as a whole and get into programs and make it easily accessible for them to find out what programs they are eligible for, okay? Now there was a resurgence in the last like 5 something years with the tax resolution companies picked up the Fresh Start program and it blew up, okay? And so now they kind of use those key terms, right, to get us keywords, Fresh Start program, tax forgiveness, right? But the IRS doesn't really use that type of terminology anymore, okay? So you got to be careful. Okay, so now I'm going to talk about the programs that are available to you through the IRS, okay? The number one program that everybody wants is the Offer and Compromise, okay? OIC. The Offer and Compromise is where you settle your debt with the IRS based on an approved offer, okay? Now, there are Offer and Compromise calculators on the IRS website where you can plug in your income, expense, asset information, equity information, and it will tell you if you are eligible, okay? Now, what the IRS is looking at in terms of an Offer and Compromise is, first of all, after your income and expenses, do you have disposable income left over, right? And with that disposable income left over, do you have an ability to make a monthly payment? If you do have money in retirement or banking or assets, do you have enough to cover your entire tax liability? And so they're looking at your financial overview, right? To see, does this person have an ability to pay? Does this person have hardship, medical, divorce, all these other external factors that could be affecting their income now or in the foreseeable future, right? And so that's how they determine if you are an offer candidate. You can make your offer. It can be paid in one lump sum payment, or it can be broken down in 6 to 24 months, which does increase the offer amount, okay? Now, this does take financial analysis, someone to really look at your income and expenses and see how they can take your financial overview and present it in a strategic offer to the IRS, okay? Next, the number one program that the IRS has is their installment agreement, right? And I know we don't think of that as a program, but that's their number one program, is to just get into an installment agreement based on what you owe and based on your expiration dates. Now, people always say, like, how many months is the IRS program? Usually the IRS is looking at a 72-month program, okay? They take your balance. We're not just dividing it by 72 months though, guys. What they are doing is they're looking at your expiration dates of your balances, okay? Now, some people know about this, but some people don't. Your IRS balance per tax year has a CSED date, CSED, and that is your collection statute expiration date. Every tax year that you owe for expires 10 years after the tax return was filed. That balance expires 10 years from the date of the filing. Now, there are other factors that could extend a CSED date, right? And maybe I'll make another video later on. So if you get audited, or if you had, income that you didn't report and they had to update your return, then that updates your expiration date. But when the IRS first comes to you and they propose an installment agreement, which it's always good to know what that amount is, right? That's your starting point. So let's say the IRS looks at your balances and your expiration dates and they say, we want this paid in 72 months. Your installment agreement is $575 a month. That's your starting point. It's always good to know that number, okay? That is what's called just a streamlined installment agreement. The IRS proposes it, you get into it, and that's your payment plan. Now, let's say the IRS proposes that installment agreement, but you cannot afford that, right? They say, hey, $775 a month will get you into an installment agreement today, but you can't afford it. So we go to our next program, a PPIA. Okay, this is a great tax resolution strategy, a partial pay installment agreement. We call it partial pay because the IRS is proposing an amount, but you are going to partial pay, okay? You are gonna pay based on what you can prove you can afford. So the IRS says, hey, your monthly payment's $775, but through your income and expenses, you can show that, hey, I only have $250 left after my allowable expenses. And that's all I can afford. Now, the reason it's called a partial pay is if you can get your number below the IRS's proposed installment, then guess what? In the length of your debt, you're never gonna pay the full amount, right? Because the IRS is saying $775 because they're thinking about that 10-year expiration. Let's say you have a balance that's expiring in 3 years. If you now only pay $250, and you guys do the math, $250 times 36 months, you're not gonna end up paying the full balance, right? And so partial pay is a really great strategy when you cannot afford their payment, but your disposable income is high, your equity and your assets are high, so you can't get into an offer and compromise. But hey, you have a long-term strategy that's gonna ensure you never pay off your full IRS balance, right? That's your partial pay installment agreement. Now, let's say after your income, after your expenses, you have no disposable income. There is nothing available for you to make a monthly payment. Then the next program is called a CNC, a currently not collectible status. Now, anyone who's eligible for a currently not collectible status should also submit an offer and compromise, right? Because a currently not collectible means you have full-on hardship. There's nothing left at the end of the month. You probably don't have equity, or if you do have equity, you might already have a second mortgage, or you may be behind on the mortgage, right? So it's not like you could pull equity, or maybe your income is too low and your credit is too bad that you couldn't even pull equity if you wanted to. So a CNC is your currently not collectible status. Now, what that tells the IRS is at this time, this person has no disposable income. They cannot make a monthly payment. They are in full hardship status. If approved, the IRS puts your account in a hardship status, which is in compliance. Okay? So if you've ever had like your passport revoked or had issues like that, once you get into that good compliance in that currently not collectible status, those things will be removed and updated for you. Okay? So a currently not collectible status, now people always wonder, like, how long does that stay? Usually it's every few years, right? The IRS's algorithm and their online systems will check back in on your account. Now, to stay in these programs like the partial pay and the CNC, you have to be in compliance, meaning you have to file your tax returns every year, and you cannot add balances to your tax liability. Okay, because those are things that could get you kicked out of the programs. But all of this is really going to be based on a good breakdown of your income, a good breakdown of your allowable expenses. And remember, IRS isn't going to let you just write off every monthly expense that you have. They have an application, okay? And they use standards, right? Based on your county, your family size. And they're not just going to allow like every credit card monthly payment just because you have credit card debt. The IRS is not going to prioritize your credit card debt, okay? So there are things they will allow, like personal loans. If you can prove, they'll allow some things like that. If you have big medical bills where you're making monthly payments, if you're paying for child support, right? But certain things they're just not going to allow. Your kids' after school programs and things like that, no. But they will allow those calculations in terms of family size, okay? So there's a lot to determining factors, but those are the programs, okay? So don't go out and just pay tons of money to these companies without knowing what is out there and what you could do yourself and what you need someone's help for, okay? So use your brains on that. If you do need help finding out if you're eligible, if you need help in seeing, hey, I haven't contacted the IRS in 7 years. I don't know which tax returns I need to file. If you need help with that and finding out where you currently stand with the IRS, then go ahead and reach out to me and we can do a compliance call and find out where do you currently stand, what steps do you need to take to get yourself in good standing and get that stress off your back. Okay, I'm here for that if you need help for that. Okay, if you guys have any questions, you can also type them below in the comments, and when I have some time, I'll definitely answer them. But if you are looking to kind of just get yourself out of that tax debt, see what you're eligible for, you know, file all your past due tax returns, then of course I'm here for that, and you can reach out to me and I'll put my email below. Okay, have a good day.